What's happening, Mad Gang? It is Let's Stop This BS 2.0. I really hope you got a big fight with that introduction, and I hope you guys are as excited as I am as I was creating this video. Now, as I mentioned in the group, I did create the previous one, and then I realized, like, listen, it didn't have any sound, so I was a bit of a dumbass on that video, but nonetheless, it's good to have you guys on. It's good to finally make this video, man. And you guys know, with seasons changing in my trading career, I like to update you all on different ways of trading. As you guys can see, the camera's a bit different. I'm not wearing a mask today. It was really just like, F it, I don't want to wear a mask today. So at least you guys can see my arms, and you guys can see that there's someone behind the screen. And more importantly, today I really want to, for context around this headline, Let's Stop This BS, I feel that it's only necessary for me to be 100% real with you all, because I feel like if there's not realness in this world, I mean, look at AI, man. When I previously created Let's Stop This BS 1.0, AI wasn't that evolved, and now creating Let's Stop This BS 2.0, AI is crazy, man. And who knows, when I make the next video, how far AI will be too. So my point being is, in this world, we really just want to be real. We want to be authentic, and we want to stop the bullshit. So that's the topic of this video. But before we dive into anything else, if this is your first video that you see of me, if this video has been leaked anywhere, I really couldn't care less. I really hope that you get value from this. I really hope that you can see the previous videos where I explain I'm not editing any of my videos. There's not going to be cool edits, it's not going to be cool cuts. I think I'm just going to remove the camera later on so it can be just charts, because how I look and how good my videos are edited is really not going to bring you any compensation or benefits as to how you trade and how you make money. The money's in the charts and the money's in the candlesticks, but we'll get into that later. Before I do anything else, I'd like to introduce myself. Hi guys, I'm MC. I'm 26 years old. I grew up in a very rich house. Mom and dad was very successful, were very loving. I really got everything I always asked for. My first car was a Range Rover, actually. Sent into private schools. Money really never was a problem, and really grew up in a very healthy environment, and the schools was very loving. And I just realized that I did not want to go corporate or take over my father's businesses. I just want to trade and make money on my own, because I wanted to prove a point. And I mean, we had so much money that I just wanted to make it on my own with trading and prove a point that I can make it. I knew that I was going to be a trust fund later on, and I knew that the funds were going to come in regardless. So whatever I did with trading really didn't matter, right? That was a complete lie. Guys, hi, my name is MC. I come from a very, very small town in South Africa. I was born in October 1998. I grew up in a single parent household. My mom and dad got separated when I was 3 months old. As I was growing up, I was verbally abused by some family members that I don't really disclose too much, because that's behind me. We did not really have any money. I remember a few nights before I caught on, actually, my mom used to say that she was just going to throw in, gas in the car. Whereas I later found out that she used to sell her jewelry and stuff just to be able to put gas in the car for the next day to go to school. Growing up, I used to wash cars in our neighborhood just to make some little money, lunch money and so forth. I grew up. I only saw my dad every second weekend because of the divorce agreements. School wasn't really in the best school, but hey, I'm grateful. I'm not ungrateful. I'm super happy about that. My marks was really not that good. I was very, very lazy. I'm very smart, but I was very, very lazy, and I'm openly admitting that. Very lazy dude. I always try and find the easiest way. I'm a very hard worker once I found my roots, but as far as trying to find someone who finds the easy way or the quickest way, I'm your guy. In school, I always used to find the quickest way, the best approach to everything, and I always needed to understand. I'm diagnosed with ADHD and OCD. I got a tag team over there, and I was diagnosed without an immune system. By the age of 11, I got a very big back injury where the doctors told me I will never be able to walk again, and here I am, guys. I can stand, I can walk, I can run, I can play with my kids, and that's just by God's mercy. That brings me to my next point, my spirituality. I'm a Christian, not a perfect Christian at all, not a perfect human being at all. I don't think I'll ever be, but what makes me perfectly imperfect is the fact that I'm constantly in pursuit of being perfect, and I have made peace with the fact of knowing that I'll never be. So that has allowed me to be the person that I am today. So I really wanted to talk to you today without the mask, without the persona. A lot of you know my alias or my persona is MadCharts. But behind that, without the titles, I'm just a man. I'm a father of 2 beautiful kids for now, hopefully more in the future if God allows it, with a beautiful wife, and they can't wait for daddy to come home. So behind the charts, if I turn off the computer, they really just can't wait for their dad to come home, and I mean the world to them. So trading does not define me. My love and my wanting to live lies in God and my family at home. I'm really just a man who has lived through enough pain and pressure to understand what growth truly costs. I do not get anything handed to me, despite what the internet will always say. You guys know how the internet goes. They'll always just say one thing just to spew facts. But I mean, we're all here on borrowed time anyway, so who cares what they say? And nothing about my journey really explains to you that it was handed to me. I mean, if I was handed something, then those photos, all of the proof, it will not be there. I would just be sitting on a beach somewhere drinking cocktails. Everything you see today was built with time I didn't have, with money I couldn't spare, and strength I had to develop while life was fighting me from every angle. I really just come from a place where dreams don't get delivered to you. It simply doesn't happen, fam. You have to go out and you got to chase it, and that's what built me to the man I am today. You build them brick by brick, setback by setback. I love setbacks because I see setbacks as like it's a checkpoint to fill up gas, or if you play video games, it's like if you're going through a new level, then you have to fight a boss, and before you go to the next level, you have to fight the ultimate boss, and then there's going to be a boss on that level as well. So it's not setbacks, it's just literally you fighting the boss. Yeah, I grew up with understanding that pressure is part of the life, it's not interruption of it, and when life hits you early, you learn fast that survival isn't optional, it's a skill. I want to share that with you. Life has hit me very, very early at the age of 21. Let me just turn my phone on mute. And yeah, I really started at a very young age to learn that life it's not for the faint of heart. And my trading journey didn't start because I was inspired. My trading journey started because I needed to make ends meet, and I needed to help my mom and my brother and my 2 sisters. I'm the youngest of us, but I always felt obligated to just raise my hand and say, hey, I'm that one guy of this generation that's going to change our entire bloodline. And I always felt obligated to do that, and here I am today, busy doing that. I didn't start my trading journey with confidence either. I started with anxiety, fear, and the awareness that everything could crumble down in an instant. There was a season in my life where really everything felt unstable. I was having financial pressure. I was having responsibility on my chest to really just try and be the best that I can possibly be. We sold all of our possessions. You guys know that story. But I want to share that those nights is really what changed me as a human being. Because those nights, those long nights where you sit alone and it's only you in front of the screens, no outside noise, you really just get captivated by the limitless possibilities that this world has and that this world can give you if you just lock in. So with that being said, people see the highlights now, but they don't see the silent battles that I fought through every step. And that brings me to my next point. Believe me, guys, we will have more than enough chart work time. I want to publicly honor my wife. Well, firstly, my mom. I lost my mom last year, February, cancer. And yeah, she really just believed in me since day one. She and my dad. And yeah, I think it's just time that we publicly honor my mom. She's not here on earth with us anymore, but I know she's walking with me every step of the way. I know that, I really do. Then secondly, my wife, she was there through every storm. She wasn't there when I had money. She wasn't there when I had anything. I just told her, like when we met, when we started dating, I was like, she asked me what do I do, and I'm like, I'm a trader. And I had nothing to prove that, because of course she saw that traders was making money and stuff, and here I couldn't even, I sold my car to fund my trading account. So yeah, it's a bit of a contradiction. She was there with me through every storm, and she accepted the uncertainty, which was so beautiful to me. She accepted the long nights where I didn't go to bed with her when we were engaged and married, of course. And she loved me in the seasons where I grew up and I started to become a trader. And then let's bring it back to my kids, man. This is where everything shifted. I regained purpose. I regained understanding of the definition of strength. And I got rid of the excuses, because I knew that whatever decisions I had to make, it was going to impact them. And just to cut off everything, all things considered, of myself, trading gave me structure, trading gave me identity, and it gave me discipline. It really just made me who I am today. Let me take a sip of water. Okay. So with that being said, you guys got a glimpse of who MC is, who I am behind the charts. I think it's time that we jump into the charts and then we run through how I trade today and how I view things. But before we do that, once again, I really want to talk about the most important point of trading. This water is so good. And that is, now, don't hate me for this, but trading is a numbers game. And we all have seen this. We all know this. We all know that it really doesn't matter about the strategy. Okay, I wanna play devil's advocate here for a second and say that it doesn't really matter what strategy you're trading. Yes, of course it does. I know, MC, it gives you edge and what. But without that, and the numbers don't matter. Okay, you need to have numbers backed by what you're doing, and that's why I took my trading approach from just guessing or trading on conviction to trading with a system, because I saw that this thing that we're doing called trading is backed by numbers and it's backed by algorithms. So it would be stupid not to intervene that with the thought of playing with data collection and playing the game back with data. And so I know whatever I do doesn't really matter, because I'm doing my best to get rid of emotions and my own capabilities in the market. I'm letting the numbers do this thing. I'm just literally pressing the buttons. So I need to mention that I've met traders who made millions of dollars. Let me just silence my phone. Who made millions of dollars with a very small win rate, and that's good, because I need you guys to really keep track of that. The fact of the matter is that if you want to continue making money in this trading industry, you need to understand that, this is an important message. You need to understand that the numbers will save you at the end of the day. Without the numbers, there's really no possibility of you making any type of money whatsoever. So remember that. and I know we aim for a high win rate. We got a pretty high win rate with the way we're trading, because it's really traded based on years and years and years worth of data. But at the end of the day, you need to understand that a win rate doesn't mean anything. If you got a low win rate, you'll still be good. I've seen a guy make $2 million last month. This is true. This is so true. I'll share the screenshot inside of the Discord, where he made $2 million with a win rate of 37%. Now that's crazy. So I really want to touch base on that, and I want to leave you guys with one, before we jump into the charts, with the last word. The theme for the rest of the year, for 2026, is asymmetric risk-to-reward ratio. Asymmetric risk-to-reward ratio. Without that, we will be nothing. Your focus point is not price action, it's not order flow, it's not futures, it's not forex, it's not. Your focus is asymmetric risk to reward ratio. That's your focus point. I need you to really change your mindset to, if somebody asks you what you do for a living say you're an asymmetric risk to reward ratio trader, because that's what we want. Without further ado, let's get into the charts, man. So just an update, as you can see on my screen, I'm trading gold, GU, Euro USD, and then my secondary pairs is NAS 100, US 30, and silver. But the big portion of my portfolio is coming from gold, GP, Euro USD. And then let me just share my current live account update. Now, as you all know, I do trade with a few live accounts, but this was one account that I was building up in front of you guys with live trading and so forth. It is with a broker, EuroFX. I do believe that they are busy getting regulated, or they are already regulated. But regardless, as you can see, the position, the balance is 2035, and then the closed positions, let's run through the closed positions. I am on a current hot streak right now, but I do know it's going to end sometime. The last time I took a loss was the 29th of September. That's crazy. But before that, I did make a ton of losses before I made a few changes to my entry method. 2,900, 1350, 1350, 1340. So it's all pretty much the same. Here's a big loss of 16,448. 860. So majority being, yes, I do take losses, but I focus more on my wins because I have asymmetric risk to reward ratio. Pairs I'm trading, already mentioned that. I do have gold, US 10-year, the government bonds, the DXY, the VIX, and then our composite index. That's just for extra confirmation on gold. But remember, correlation does not mean causation. So I can give you 10 confirmations to look at today. You're still going to make a loss sometime. So you need to be prepared for that. And if you really, really want to be foolproof in this trading industry, you need to remember that asymmetric risk to reward first. But you also need to remember that if you can develop or come up with a strategy apart from what I'm sharing you today, if you can come up with a way of trading that can handle 6 to 7 losses in a row, you're going to be set for life. The indicators I'm currently using is the 50 SMA, 50 EMA, and then I'm using my blue one is my 18 and my 9. The Sonolab sessions, I'm just going to scroll through my settings so we can all have the same setting. Just pause on the video time, a timestamp where you want to capture my settings. Asia session, London session, New York session. These boxes are really, it's really important just to know what timing window we are in, but it's not that important as giving me a trade timing. So there's a volume and then there's time. These are two important things in trading. Without volume, we can't trade. Without the correct timing, we can still trade. But without time, if it's in the right time, without volume, we can't trade. But if it's in the wrong time and it still has volume, then we can trade. So I want to mention that volume is number one. Volume is always going to be number one, because if a lot of you don't know this, I come from a background of futures, and they're really focused on volume. Volume is super important, so you always got to remember that. Then let's take a look at the time frames that I'm trading. I'm looking on the daily, the H4, the H2, H1, M30 and M15. I'm really not going to do a top-down analysis in this video because I feel like there's webinars, there's a lot of videos regarding that. I want to talk about problems that we're all struggling with, or that you're all struggling with, and I want to place repetition on those so it really steers away from becoming a pain point. Okay, now there's 3 strategies inside of the course. There's a breakout, there's a day count, and then there's more than 3. There's a mad block, the mad strat, and then the baseline test. Guys, that's just confirmation. Okay, that's just confirmation. The mad strat, if you're trading mad strat with day count, that's 100%. But you need to remember, the mad strat gives you the timing. The day count only gives you the trend count. That you need to remember that. When it comes to mad block, the mad block only gives you the timing. You can add a day count inside. The day count is not an entry method. The day count is just confluence to give you your entry method. So which ones are entry methods? It's mad strat, baseline and mad block. The breakout doesn't give you an entry method, and the day count as well. The breakout is just entry type 2, entry type 1 above support and resistance, and then the day count really just gives you the trend count. You can count where you are in the daily cycle in the trend count. So I need you all to remember that if you ever get confused, you can use all 5 if you want. You can use a mad block, baseline, mad strat. You can use whatever you want. There's not one thing is superior to another. If you're trading mad block, or if you're trading indices, use mad block. If you're uncertain about how to count the trend, then use the day count. If you're trading on your phone and you have a busy life schedule, trade the mad strat, which you can just look at the indicators on your phone. Guys, it's not that difficult. I really need you all to stop overthinking it. It's not 5 different strategies, it's 5 different confirmations. Now, with that being said, I'm not going to focus on each of those individually. I just really want to run through all the questions that we have and then run through my current way of trading. I use all of those things together, but sometimes I do, sometimes I don't. It all depends on seasonality. One's win rate is not superior against the other. They're all super high win rates, and I think I've given more than enough information to validate their effectiveness in the markets. Okay. I've traded ICT, man, I'm thirsty today. I've traded ICT, I've traded trend lines, I've traded seasonality, I've traded order flow. I was profitable with all of them. Now, it's not the strategies that made me profitable, it's very evident. What made me profitable is my discipline. So that brings me to my strategy today. The strategy I'm going to explain today is one that forces me to have discipline. And it would be really unwise, I would have said freaking stupid, but let's say it would have really been unwise not to follow what I'm saying today. Because in the beginning of this video, I explained to you who I am as a person. But I'm really not perfect in anything. I'm really not that good in anything. But what I am good at is this freaking thing in front of me, is trading. And it's not to blow my own whistle or anything. It is because it took me 10 years. I'll be damned if I'm not good at something that I spent 10 years at doing. So I'm pretty sure I've seen a few things, I've heard of a few things, and especially on top of that, I've got the characteristics to portray a perfect trader, and that is OCD and ADHD. So everything has to be perfect to me, and it's got to be a fast-paced, moving environment. So you need to pay attention to what I'm doing, not because I just say so, but because I'm having more students have 100K days than I'm freaking taking sips of this water every day. There's more successes in our academy than I've seen outside in the social world, and that's crazy. I mean, the evidence is there. Just stay on the Discord and you'll see some of them pop up every now and then. My strategy teaches me to have discipline. Not teaches me, scratch that. It forces me to have discipline. So I'm going to turn off my camera and then let's focus on the charts. I look at, I already mentioned my pairs, but I look at the 50 EMA and the 50 SMA. Why, MC? because they give me my timing for my entry. I look at all the other things, but I look at the 50 EMA and the 50 SMA as my final trigger. No baseline, no trade. No baseline, no trade, no baseline, no trade, no baseline, no trade, no baseline, no trade. I don't know how many times I need to say that. I'm just gonna say it one more time. No baseline, no freaking trade. Because it gives me my timing window. Hey MC, but I see the market is up here and no, I see the market is down here and it broke London and it broke Asia and it's in a downtrend. I don't care, dude. I don't care. We need to wait for the baseline. No, but wait, MC, I see the market coming down here and it broke London again. We're in a strong downtrend. It's a false break reversal day 2. I don't give a shit. It needs to test the baseline. I don't care. I don't care. We need to touch the baseline. I really hope I've I've made myself clear at this point. No baseline, no trade. No baseline, no trade. Okay, that's very important. Yo, but MC, you're an indicator trader. Man, you can go and kick rocks, honestly, because I'm not an indicator trader. I analyze my charts, clean charts, without the indicators. I get a thesis off from them, and then I go to my indicators. As simple as that. The indicators just gives me timing. They give me a timing window, because you can call the tops and the bottoms all day long. You can call the exact point where they're going to be turning, but if you cannot get your timing window right, you're screwed, man. Okay, so I want to do something real quick that will explain my 2 type of entries. And what I mean with 2 type of entries, it brings me to another point. I mentioned in the beginning of the video, asymmetric risk to reward ratio. And you can go and Google this just for your own validation. This doesn't need to be perfect. Okay, that looks bad. That looks very, very bad. Asymmetric risk to reward ratio. On top of that, you need to have dynamic risk. So I like to look at A setups and B setups. Okay, that's very, very important. Why is that? Because then you overcome the concept in your mind of trying to risk everything on one trade. I'm forcing you to have a timing window. I'm forcing you to manage your risk by looking at asymmetric risk to reward ratio. And ultimately, I'm forcing you to be able to distinguish between a good setup and a bad setup and still trade regardless, so you don't get any FOMO. Now, with all things considered, the day count, taking the day count into consideration, I really want to just talk about my entries. I want to talk about this entry on the 12th of November. Okay, I'm really going to critique the shit out of this thing. So once again, the day count, everything, the higher time frame structure, price action is already done. We want to talk about our timing, because you can analyze however long you want, but if you can't get the timing window right, then you're screwed. So I want to focus on this entry that we have off from the baseline. But MC, we had a test over here at the baseline as well. Yes, I know, but let me touch on the real entry, and you understand why this entry was not perfect or ideal to take. So an A plus setup, well, an A setup needs to be below all of the moving averages on all time frames. And I hope you guys are taking notes. That's the M15, that's a 30, that's the H1, and that's the H4. It needs to happen. And it means a bullish candle touches the baseline. That's my A plus or my A setup. A B setup, folks, is if we have 1 or 2 higher time frame EMAs above my trade. That means I just got to pay attention to the higher time frame EMA. But then that immediately becomes a B setup. And then if we have a bearish candle touching my baseline, that is immediately a B setup. If ultimately I get a bullish candle touching my baseline, that's still going to be a B setup because a higher time frame EMAs are against it. Now MC, what do I do with an A setup and a B setup? I'm going to tell you what I do, and then you can just maybe follow it if you want. So we all know I trade a few live accounts. In my personal capacity right now, I have 4 live accounts that I'm trading with, but the idea on all of them is the same. And then I have a prop accounts. I'm currently funded with 1.150. I do that just for the heck of it. I mean, it's a good salary, it brings in good money. Live accounts on my A setups, on my A type setups, I risk 10% per trade. Now it might seem like a lot, but I'll explain in a short while. I hope you guys realize that this is worth gold. This comes from a background of hedge fund traders, market makers, portfolio managers. So I really hope you guys pay attention. B type setups, I immediately risk 5%. Now on prop firms, A type setups, I risk 1% per trade and 0.5% on a B type setup. Now if you go and watch our exit type methods, you will understand, I'll put this all into practice right now, you will understand that I'm very, very peculiar at setting my stop loss while exiting a trade, not prematurely, but before we hit a stop. I'm very, very peculiar at doing that. So let's run through this trade and then it will all make sense. Now I'm going to put on the bar replay tool. So you can see 15 minute it rejected, 30 minute it's below H1. I'm looking at the EMAs right now, it's below. H2 it's below, H4 it's below as well. Immediately A plus an A setup, I'm gonna risk my 10%. Let's see the bullish candle rejects it as well. What needs to happen next, and guys, don't fill in any noise. You follow this exact process. Don't look at stochastics, RSI. I've done those, guys. In 10 years I've tested that. Please believe me. Don't look at order blocks, don't look at fair value gaps. Don't, please guys, just this is the process. Just follow this process and you will make money. But the goal is have a small stop loss, as small as you possibly can. If you don't do that, if you're gonna come to me and you say, MC, I entered this trade but my stops was right over here, then my friend, you're gonna get burned. You're gonna get burned sometime. I hate to break it to you. The idea is to get the candle testing your baseline, break above your blue and your red. That needs to happen. So I'm going to tick it off for you so that you can have your own set plan. Needs to test the baseline. Needs to have a bullish candle. The blue and the red, the blue must be underneath the red, the blue being my 18. Okay, that needs to happen. That's very important. I see a lot of you neglect that. The blue must be underneath the red. My bullish candle must close on the entry time frame, which is 15 minute or 30 minute. Must close. It's super important. Must close above my blue and my red. That's very important. Then I go down to the next steps. Let's go down to the next steps. What you do then after that is you mark the high of the candle that just ticked all of those boxes, which is going to be this one. Then what I need you to do is drop down to the 5 minute time frame. Then on a 5 minute time frame, you'll essentially see this high right here. This high was drawn, this high was created. Then we need to break above that high by 100 points on gold, 10 points in currencies. So you can see here 100. We need to break above that line. We got that. And then where's my stop loss going to be? Your stop loss is going to be, so your entry point is 100 points above that. Done deal, you're in. But you need to always make sure that the blue and the red on the 5 minute, no other time frame, the 5 minute, is above the baselines. It needs to be above both of them. So what you do then is 100 points above that, entry is above is at my red line, and then let's see where my stop loss is going to be. Stop loss is going to be at the candle that triggered on the 15 minute, or if it was seen on the 30 minute, it's going to be on that time frame underneath the candle that it tested. So it's going to be entry here, stop loss over there. Okay, we got our entry. Good job. Now, where's our exit going to be? With exits, I'm looking at three things. I want to put my camera on again. I'm looking at three things. I'm looking at three things. Three. I'm looking at three things. Okay. One of them, exhaustion zones, break above, coming back down. Another one, test of the exhaustion zone and then rejecting it, or breaking my EMAs. That's super important. But I've seen a lot of you struggle with drawing exhaustion zones because you don't know from the high time frame to low time frame. It's kind of confusing. It's really not that confusing. So essentially, you want to draw, when you do your analysis, you want to draw your exhaustion zones on the H4 time frame. Why is that? Because candlestick maturity. Oftentimes, let me just show it in action. You'll see an exhaustion zone, and you'll have no idea why the market tested that area. Let's go down to a 15-minute time frame. And on a 15-minute time frame, you'll see that it's nowhere near perfect. You will see that on the 15-minute, this is where my exhaustion zone is at. And then you'll be like, well, why did I start losing volume at this area? Why did the markets not break through this area? It's because on the H4, you can see we had this big ass exhaustion area. So that's why you refine them to a lower time frame. But you focus on the exhaustion area on the 15-minute or the 30-minute because that's a timing area that you entered off from. When you do analysis, you do it on H4, H2, H1, but try not to get your charts too cluttered because it gets kind of yucky. So the key exhaustion points, exhaustion areas, because there's so many, I want to reiterate, there's so many, is at the high and the low of the sessions. That's why we have our boxes. But they're also going to be at the first hour of New York session or London session or Asia session. That's going to happen. So we can clearly see we have an exhaustion area over here. We have an exhaustion area over here. We have one over here, but we created a new one. So we're only looking at that one. Okay. We also have one over here. And let's look to the left. Now pay attention, I'm drawing these on the 15-minute time frame. Why? Because I entered on the 15-minute time frame. As easy as that. We can also see we have an exhaustion area here, and now let's pay close attention. We can see we have one here. We have quite a lot, man. We have one here. It's literally from the high to the low. Why? Because that's when bids got filled by asks. So there's absorption that took place over there. There's a deal that happened there. Aggressive buyers turned into aggressive sellers, or aggressive sellers turned into aggressive buyers. This is where the market comes into agreement, when there's no exhaustion areas. But when there was a wick like this, remember, the only value that we can count in trading is candlesticks. Yes, there's line charts and so forth. Don't get into argument with me. But we're currently looking at candlesticks. So it's very important for us to understand and digest that we need to be able to articulate what the movements that we're currently seeing and why. So there was agreement over here. We saw the sellers agreed on a price, the buyers agreed on a price, and they ultimately pushed the price back up. Because we have a wick, the buyers tried to push price back up, and then the sellers disagreed on that price, and then they pushed it back down. There's a massive difference, and it's very important for you to understand that. But the why behind it is not that important, as long as you just shake your head and you say, yes, MC, I hear what you're saying, and you just follow that. Then we can also see we have one here, and we have one here. Now, you'll probably notice we have a lot of exhaustion zones. We have a lot, okay? But it's also important to understand that the market will also create exhaustion zones while the market is flowing, like we had just here. We had one here. Now MC, why are these not exhaustion zones? This one, this one, this one, this one, this one. Because for exhaustion zone to happen, remember what I said in the beginning, it needs to be a buy candle and a sell candle, because it means buyers push the price back up and then sellers push the price back down. That means that they disagreed. They disagreed on a certain price, and that pushed the price back down. Okay, so we can see we have an exhaustion area here, and then we have one here. Very, very important. We also have another one here as well. Now it's getting very iffy. I don't like that much exhaustion zones, but I really just wanna explain why we use them and how we use them. So we can already understand that we're inside of this trade. Remember what I said: exhaustion zone test, or exhaustion zone breakthrough and coming back down, or EMA's break. Now we need to watch for either one of them. So you can see the market pushing up when we came here. Then the exhaustion zone was created. We did not break through the exhaustion zone. We did also not close below. So we're still in this trade. This exhaustion zone becomes invalid. We got another instance where the market closed above and it came back down. So that's where we close our 50%. Now I did mention this in a webinar one time. If you have a small account and you're very stingy with your trades, you can close 100% there. Only with a breakthrough and coming back down. Only with that one. But if it rejects it, if it just purely rejects it, then, well, not rejects, it needs to close below, then you close 50% as well. But you only close 100% if you have a small account and you're very stingy with your money. Not stingy in a bad way, stingy in a good way. You're very protective of your money. Then you should look at a break above and then a coming back down, close 100% there or 50% there. Other instance is when we close below the moving averages and we need to break that low, which we got over here. We got the market closing below my EMAs and then breaking that low. As easy as that. So you close your 50%, you're at the top, and then the other 50% you closed here at the bottom. Now I want to point out, look at the risk to reward ratio. If you look at the risk to reward ratio, on this one you caught the 7.11, and then over here you caught the 5.62. So you count those two together and then you divide them by 2 because it's 50-50, or if you close 100%, let's just say 7.16. Then you're done, guys. You leave the trade. You know where to enter. You got your timing. You know where to exit. You got that right. And you know, well, you can kind of expect where your stop loss is going to be. As easy as that, nothing complicated. So you're up 7% now on your funded account. You're up 7R. Well, 7.16. You're up 7. You can lose 7 trades in a row and you'll still be at break even. I cannot understand why you guys will go ahead and blow accounts. I really cannot understand it. I really don't see how that is possible. And maybe I'm ignorant, maybe I'm arrogant, say whatever you want, but you really just got 7 chances after this win. If you blow your account and you upsize after this and you blow the account completely, that's just stupid, man. That's just so dumb. That doesn't make any sense. You got to make 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7 losses, and then you'll be back at 0. Why do you want to go and risk it all on 3 losses and then lose your 7%? It doesn't make any sense, guys. Man, the numbers don't lie. I don't know how I can explain that any better. And then you make another trade. You make another trade and you make another trade. So let's say you get a 7R and then a 4R and then a 6R, and then the other day I caught an 11R. So you're up 7, that's 11, plus this 6, that's 17, plus this one, that's 28%. And then let's say you take a few losses in between, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's minus 12. So this is very bad, I know, but it still carries weight. You're up still 16, and you made more losses. You made 12 losses where you made 1, 2, 3, 4 wins. That's 16 trades per month, and that's still a lot, guys. That's really a lot. These losses, if you take that many losses, something is wrong. Something is really, really wrong. But you can still see this is a 30% win rate where you got 4 trades win and 12 loss. That's a 30% win rate, and you're still up with 16. If you risk your 10%, you're up 160%. That doubles the account in a month. No bank will ever be able to give you that. No bank will ever be able to give you that. And then just repeat that, guys. Some of you want to take 16 trades. Some of you want to take 16 trades a day. That doesn't make any sense. So, with that being said, I need you guys to always understand that the trades will come. I want to look at this trade that just happened. The blue was not below the red. It was only below the red over here, but then you're too far away from the baseline. You need to come back down and test the baseline, and we're on top of the exhaustion zone. Guys, we need to have some common sense in this, okay? We need to really just pay attention to the details. A lot of you are it's only you that create the detriment to your trading account. So you need to be able to understand these basics. Watch this video, pay attention to the detail, don't add anything. Remember my 3 ways to exit, remember the stop loss placement. It needs to happen on the candlestick flip. And now this gives you a groundwork, and then also a framework for you to understand, okay, MC looks at this, looks at this, looks at this, looks at this. This is your stepping stone to financial freedom, guys. Now I expect of you to put in the work and go and do data collection on this, do some back testing, come back to me with feedback. Remember, this is not a give all, set all, you guys are now set for life. I just gave you the keys. I just gave you 10 years worth of work. I tested where my stop loss needs to be. I tested the exits. I tested this. I tested that. But what this gives you a clear set of rules and guidelines where to exit. I don't care if you've got a 100% win rate. You will never not know where to exit with something else. You will never know where to exit with something else. This gives you exact entries and ways to exit. So please, guys, watch this video on repeat before when you wake up, before you go to bed. This pattern repeats itself, and it repeats over and over and over and over again. Follow that pattern and you guys will make money, until you put your head to rest. I hope you guys enjoyed this. Much love, and then I will wait your feedback in the up and coming messages.